Welcome back to the channel, and thanks for joining me. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're studying a momentum continuation system called Impulse Efficiency Pullback. What makes it unusual is that it uses no traditional indicators at all. Instead, it measures raw price geometry through a hand-built momentum gauge called path efficiency. By the end of this video, you'll understand how it spots a clean thrust, how it waits for a shallow pullback, and how it times its entry. So let's dig in and see how it works. So what exactly does Impulse Efficiency Pullback do? At its core, this expert advisor is a pure price action and momentum continuation system. It doesn't load a single library indicator. No moving averages, no relative strength index, no stochastic, nothing. Everything it knows about the market it calculates by hand, directly from the raw open, high, low, and close of completed bars. The engine behind it is a measurement called path efficiency. Imagine price over the last several bars. Path efficiency compares two things: how much net ground price covered from start to finish, which we call the displacement, versus how far it actually traveled along the way, adding up every little zig and zag. When those two numbers are close, efficiency sits near 1, and that tells us price moved in a clean, one-directional thrust. We call that an impulse. When price wandered back and forth going nowhere, efficiency drops towards 0, and the strategy simply stays out and waits. In terms of markets, this EA is designed with momentum-rich, intraday instruments in mind. Think major foreign exchange pairs like the euro against the US dollar, or stock index products such as US 100. The author suggests time frames in the 15-minute to 1-hour range, but nothing about the time frame is hard-coded. Whatever chart you attach it to, that's the time frame it analyses. Who is it suited for? Educationally speaking, this is a study piece for traders who are drawn to trend continuation rather than reversal trading. It's for people who like the idea of waiting for the market to show its hand with a strong, efficient move, and then joining that move on a small dip rather than chasing it. As always, everything here is for educational purposes only. It's a way to understand how a disciplined, rules-based momentum system can be built from nothing but price itself. Let's walk through the exact logic, step by step. The strategy operates in 3 phases: detect, wait, and enter. Phase 1 is detection. On every newly completed bar, the EA looks back over a window of bars set by the impulse look-back parameter, 5 by default. Across that window, it computes path efficiency, the absolute net change in price divided by the sum of every bar-to-bar move. If that efficiency meets or beats the efficiency minimum threshold, a default of 0.62, the strategy declares an impulse. The sign of the net move decides direction. Net upward displacement marks a bullish impulse and arms the EA to look for a long. Net downward marks a bearish impulse and arms it for a short. At this moment, it also records the highest high and the lowest low of the impulse. That's its envelope, or range. Phase 2 is the wait for a shallow pullback. Once an impulse is detected, the strategy expects price to drift back against it briefly, and that's perfectly healthy. But it measures how deep that retracement goes relative to the impulse range. If price pulls back more than the MaxPullbackFrac, a default of 0.55 or 55% of the range, the strategy concludes the thrust has failed and abandons the setup entirely. It also won't wait forever. The MaxPullback bars parameter, for by default, caps how many bars it will hold out for a resumption before giving up. Phase 3 is the entry, and the long and short rules are perfectly symmetric. For a long, the strategy signals an entry when a bar closes back above the previous bar's high, with price resuming in the impulse direction. For a short, it enters when a bar closes below the previous bar's low. That close back through the extreme is the resumption trigger. Risk is taken straight from structure. The stop loss is placed at the pullback extreme, the lowest low for a long, or the highest high for a short, then pushed a little further out by a buffer sized from the impulse range and controlled by the stop buffer fraction. The take profit is then set as a simple reward-to-risk multiple of that stop distance, governed by the reward-risk ratio, which defaults to 1.8. And importantly, the EA only ever manages one position at a time, so it never stacks setups on top of each other. Let's look at the actual MQL5 code on screen, just as it appears in MetaEditor. At the top are the input parameters. These are the dials you can tune in the strategy tester. Impulse lookback sets how many bars define the impulse window. A smaller number reacts faster, but to shorter thrusts. Efficiency minimum is the quality gate. Raise it toward 1 and you demand cleaner, straighter impulses, which means fewer but higher conviction setups. Max pullback bars and max pullback fraction together define what counts as a shallow, acceptable retracement. Stop buffer fraction pads the stop beyond structure, and reward risk ratio scales the take profit relative to that stop. Lots is simply the order size. Now the heart of the entry, inside the onTick function. The code reads the previous bar's high and low using iHigh and iLow at shift 2. It then forms two Boolean flags. Resume long is true when the strategy is waiting long and the just completed bar's close pushes above that previous high. Resume short is true when it's waiting short and the close drops below the previous low. If either flag fires, and we're not already in a position, the code calls try enter with the trade direction. Finally, look at how the exits are built. Buffer is the stop buffer fraction times the impulse range. The stop loss sits at the pullback extreme, minus the buffer for a long, or plus it for a short. Risk is just the distance from the entry price to that stop. And the take profit is the entry price plus, or minus, the reward risk ratio times that risk. Clean, structural, and entirely derived from price, with no indicator handles anywhere. Let's bring it together on a chart. The panel beneath the candles is our path efficiency gauge, and the dashed green line is the impulse threshold at 0.62. Watch the first move. Price pushes higher across several bars in a clean, stair-stepping thrust, and the efficiency reading climbs well above the threshold into the green impulse zone. That's the strategy detecting a bullish impulse and recording its range. Now price eases back for a couple of bars, a shallow pullback that stays well within the allowed depth. Then comes the resumption bar. It closes back above the previous bar's high. That's our trigger, and the buy entry fires. From there, price continues in the impulse direction and reaches the take profit, set at the reward to risk multiple of the stop. Now watch the mirror image on the right. After topping out, price rolls over and drops through several bars in another clean, efficient move, this time downward. The efficiency gauge spikes back above the threshold, but because the net displacement is negative, this is a bearish impulse, arming the strategy for a short. Price drifts up briefly in a shallow pullback that holds within the limit. Then a bar closes below the previous bar's low, the symmetric short resumption trigger, and the sell entry fires. Price falls away in the direction of the impulse and tags the take profit below. Notice the symmetry. The exact same three-phase logic. Detect a clean impulse, wait for a shallow pullback, and enter on resumption. Works identically for longs and shorts. The only difference is direction. And remember, this is an illustration of the rules for educational purposes. Real charts are messy, and not every setup resolves this cleanly. And that's Impulse Efficiency Pullback. We covered how it measures path efficiency to spot a clean impulse with no indicators at all, how it waits for a shallow pullback without letting the retracement go too deep, and how it enters on a resumption bar with structural stops and a reward to risk-based target. I hope this gave you a clear picture of how a momentum continuation system can be built from raw price alone. Remember, everything in this video is educational content only and not financial advice. If you found it useful, please hit like, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment with the EA you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.